Good morning, guys. October 21st, 2019, Monday. Week that is going to be focused all around earnings, but nobody's talking about how potentially Boeing, Facebook, and oil can actually bring the market much faster than anyone expects. Now, the general idea is there's not going to be any big moves in the market until Federal Reserve meets next week, which is going to take place on October 29th and 30th. So 30th, when the decision is going to be announced, like it typically is announced around 2 p.m. on a Wednesday, expect the markets to be highly volatile, so we could actually start buying VIX calls in expectation of this event, which could really spiral the markets lower. Now, you wouldn't think that clearly because the markets look nice and beautiful and happy in the green today. However, that is not going to last very long. Possibly got another 10-15 points to the upside and about 200-300 points to the downside on the S&P 500. Now, a couple of things that nobody's considering is the fact that Boeing is not going to stop falling here. Now, Boeing had a major support level around 320 now for about a year and a half, and it is officially likely to be broken because institutions are going to continue selling the stock. Facebook's got a couple of things that could move this thing lower today by the end of the day, so buy Facebook puts at the open. It is trading slightly higher on very light volume, and oil appears to be unshaked, but oil can drop any moment, $2-3 under that key level of $52. If you see oil drop below 52, guys, definitely get more puts and don't even hesitate about it. Oil will bring this market down. What nobody's concerned is the fact that Boeing could keep sinking the Dow, Facebook could keep sinking the technology sector, and oil is just going to be the one thing, if it drops below 52, that could really impact every index out there negatively. So despite what everybody's talking about this morning, earnings, okay, focus on these three things as we go through the rest of the week. Now, divergence is observed third day in a row. Market is up, pre-market. Yes, the futures are up in the green, but so as the VIX. And now this divergence we're noticing for 3 days in a row. So this is definitely something meaningful to be paying close attention to. Now, in expectation of the Federal Reserve meeting next week, okay, don't expect the markets to be dropping today, 50, 100 points. Expect the market to potentially do a move 5. So with that said, do not trade a ton today. Actually, the best thing to do is not to trade at all today unless you're just trying to build a position in a couple of earnings plays that we're going to describe shortly. Now, some of the trades to consider and do focus substantially on tomorrow is the correlation trade between McDonald's and CMG. MCD is going to announce earnings pre-market tomorrow. CMG is going to announce earnings after market. Basically, what you want to do is you want to observe what McDonald's is going to do in order to figure out how institutions are actually going to be playing CMG. If you see a pop and drop type scenario in McDonald's, this is exactly what we're going to lay over in the CMG trade. So ideally, want CMG to pop, followed by a big drop. Some of these reversals, guys, they are the most powerful plays if you try and substantially increase your count. So with that said, this is a very powerful correlation trade that could put some definite money in your bank. Same strategy, XLNX, Amazon trade. Now this one, the beautiful thing is XLNX, which has been an institutional's favorite among the cloud sector, is reporting earnings on Wednesday night. Amazon is reporting earnings on Thursday night. So basically what you want to do, you want to observe the behavior in this stock. Actually, there's a few other cloud plays like F5 Networks, FFIV is the ticker. So they're announcing, a lot of cloud stocks are beginning to announce Wednesday night, which is the day before Amazon is going to announce. So by observing the behavior in these stocks, we're going to be able to know exactly how to play the Amazon trade. Now notice, we're not buying any Amazon puts today. We're not buying any Amazon puts ahead of the earnings. We're not buying any calls. We're waiting until Amazon actually is going to announce the earnings. So we're actually looking to trade Amazon on Friday. So this is going to be a very powerful day. Amazon's going to be moving crazy, plus minus $100. Get ready to roll. Preserve your capital to make sure that you can capitalize on these trades. Now, in the meantime, a couple of easy ones, okay? BIIB, Boeing puts. Lennox International puts. SAP, now be careful of this one. This one looks rather bullish, but we do expect a reversal at some point by the end of the day. KMT is a cheapie, but beautiful shorting opportunity as the stock initially drops, bounces. I would like to short it around 28 bucks. Now, didn't have time to insert every chart in here, but the most important ones are here, guys. So basically, we were riding Boeing shares lower all the way to 320. As pointed out, 320 is a major support level in Boeing. So typically, anytime it gets close to 320, you want to close your puts. And, you know, because it could pause for a day or two, it is announcing earnings. So your options, unfortunately, are not going to be the cheapest ones, but you don't have to hold them through earnings, because before earnings, I think people are going to be selling the hell out of Boeing going into earnings. So far, pre-market is trading around $336. So you got $16 drop. Basically, what you want to do is buy $335, $340 puts on Boeing as soon as the market opens and add on any bounce. Now, clearly, we have not seen this kind of volume as we've seen on Friday in Boeing. Look at this red volume candle sticking out, higher than any other volume in the last 4, 5, 6 months here. Clearly, this sell-off happened right after we observed the head and shoulder pattern, and we do believe, because the story did change substantially, this is not just a one-time drop. This thing is likely to drop, and we would estimate it could easily drop as more and more institutions are getting out. If you see Boeing at like 309, it could actually drop. In other words, if the level of resistance, if the level of support in Boeing is broken around 320, and it does drop at 309. Once it hits 309, you guys want to buy some freaking puts. You want to start buying them now. If it breaks the level of 320, you want to add more. You definitely want to add a bunch at 309, because that tells you from 309 it could easily drop to 280, possibly even 251. Now, what could bring this stock like literally another 100 bucks? Now, you see the middle action finger right here. This was the highest volume sold off before. So when you compare the current volume on the weekly chart, which was huge on the daily chart I've just pointed out to you on the previous slide, guys, it doesn't look as substantial as this one, but nonetheless, it's the highest volume in the last 6 months. Now, we are likely to see a continued sell-off that may not resemble this huge volume here, but the volume is likely to increase on day-to-day basis, particularly when Boeing is going to announce earnings. So this could be a huge catalyst between all the negative sentiment going on right now. Institutions are going to be unloaded. If there's no reason to buy shares during the earnings announcement, then, guys, this could be a beautiful opportunity for a substantial drop. Again, all these calculations and target prices under 320, they assume that this level of 320 will be broken. Now, if you trade in this actively over the next few days, you're noticing that every time we get to 320, the stock bounces, the stock bounces, the stock bounces off that level. Probably not a good idea to short it, but rather, if you're getting this morning, target that 16-point drop, collect the profits, and watch this 320 level. When it gets broken, get in. Considering BIIB, 220, 210, 200 level puts before earnings. Guys, typically we don't buy options before earnings. Occasionally we do make a very rare exception. This is one of them. This chart, basically, after this death cross, it had an opportunity now to form before and after death cross a quadrant top, multi-top formation. And there's been very good news after this drop, and each time the stock has actually failed to take out this level of 230, 240. Anytime it just barely reached slightly over 240, it moved lower. So currently we're at 220 level. We're suggesting 220, 210, 200 level puts. An expectation the stock actually getting in the 180, 190 level. So targeting about a $30 drop after earnings announcement. Now, futures of oil, even though they're not dropping substantially, but they are drawing exactly the chart pattern, just like I've shown you in the Boeing chart. Guys, this is identical. And you know what happened to Boeing Friday, right? So this, what causes us to still be highly bearish on current market conditions, is the oil has been drawing this head and shoulder and move 11s pretty much on day-to-day basis if you look at multiple time frames. So that tells us it could definitely drop substantially from here. Oil breaks 52. I mean, they're not going to be talking about earnings. All of a sudden, they're going to be talking about oil. Here's the divergence I pointed out so far. As I'm recording this, the market is at 29.98 pre-market, but VIX is at 14.42. What is VIX doing going high when futures are 10 points in the green? Now, this clearly is pointed out on Friday. The setup was identical. The futures were actually hitting about the same level of 3,000 while VIX was moving high. So now we're hitting the same level. You see the point here. Between Friday and today, Monday, we're hitting the same level on S&P, but VIX is higher. I mean, this is where VIX was at 1408. We're hitting roughly the same level on Friday. Well, today we're at the same level, but VIX is like 14.4, 14.5 level. Okay, so very interesting observation continues to develop. Now, guys, this is the earnings week. You don't want to just take a bunch of directional bets. You really want to target some of these cool earnings announcements. Now, today's not like a huge day. So, guys, if you're looking to take a day off, this would be a good day to do so. But be ready for tomorrow. If you're looking to put on this BIB trade, it is going to announce earnings tomorrow morning. So you probably what you want to do is buy a few puts ahead of earnings and add some after it announces earnings. Now be careful, if it does touch 200 level, it could actually bounce off of that level. Okay, but the chart points to a decent sized drop, so just stay with the trade, and I would add on the bounces on the put side here. Now, a couple of other cool trades is Polaris, McDonald's, Lockheed Martin, all of that stuff is tomorrow morning, guys. Depending on how the stocks are acting pre-market, all of these could represent actually a great opportunity. After hours, CMG, Whirlpool, iRobot, ton of really huge potential trades right here. Granger, Alexion Pharmaceutical, guys. This one we've seen some increase in bullish activity in the 105 strike calls. They've been buying a hell out of them, but the stock is still trading around that range. So this could have either a huge breakdown lower, a huge breakout higher. So we really want to see the initial reaction before we jump in. And here's Boeing that we've been talking about, right? So Boeing will announce earnings Wednesday. So how long are you planning to stay in this Boeing trade? Between today and probably Thursday, okay? Or if you want to cut it before the earnings announcement, just basically trade Boeing today and tomorrow. Once it hits that support level of 320, get out. Okay, finally, some of the area that we believe is going to produce the highest returns, some of these semiconductor stocks. Now, Apple is up pre-market, and so the sentiment is still bullish. But again, it could be reversed rather quickly in the technology sector. So LRCX, this could make or break the semiconductor sector. Some cloud plays. I mentioned that what we want to do before we actually put on the trade on Friday morning on Amazon, what we want to do is observe LRCX. We want to observe Now that's another cloud stock. Okay, we want to observe FFIV, XLNX, all of these cloud plays that will actually tell us what institutional investors are wanting to do with the type of earnings that these companies are going to report. Now, generally, in the last few months, the cloud sector has been highly bearish. Okay, and we're expecting that to continue. But we're going to be looking for any potential TRO developing in these names to really understand how to profit from the Amazon trade. Now, retest of the top part of the tunnel is very likely today, guys. We could easily hit a level 3008, 3015 before reversing lower over the course of the next few days. Now, October 18th on Friday was a clear move too. We basically moved slightly higher, and then we sold off. We sold off once, and then looked like we're rallying again, and we sold off twice. Now, this is a clear move 6 behavior. So when you see a lot of moves, 11s, 6s, even when we used to have a few days ago some 7s, they had a 6 behavior at the very end, basically when the volume spikes, when the actual sell-off takes place. So all these are important components in understanding that we're still very much in the top information, but you will hear a lot of BS in the news, how they're going to tell you all the market's moving to all-time highs, everything's beautiful and wonderful. This actually presents some phenomenal opportunities because the options on the put side, they're very inexpensive right now, and you want to basically look into that and capitalize on the cost of these options. Your investments on Thursdays and Fridays, some of these put contracts are not going to be very much, so you can actually target easy 400, 500, and some instances 1,000% returns because put options are definitely mispriced right now. The market is just too complacent. So when you look at a 2-day sequence, it's highly bearish as well. 11-2, basically you get a top information, followed by another top information later in the day, followed by another potential move higher and a sell-off and another sell-off. Guys, that's a thing of beauty, especially when you look at the 5-day sequence. 5-1, basically the market's trying to figure out what is that to want to do. They think they want to go high, but then 3 bearish moves back to back, and the VIX, basically what it does while these moves are taking place, it hits the bottom at like 13.3, and since then it reverses and it creates a series of solid uptrend series of higher lows. Now, 11 move continues to dominate. If you look at the 5-day chart, basically you got an 11, 11, 11. 11 is likely to take place today, so we find actually a very high probability for move 11 today as well. So when we're looking at today probabilities, move 5 has a very high probability. Basically, the market is going to be fluctuating up, down, plus, minus 5 points after it opens, and it's likely to finish that day like that. Now, we could get a slight pop where the market gets excited, and then they realize, oh shit, what exactly are we excited about? Then some news from Facebook could hit, then oil could drop, then the market could get concerned, get hit some more by Boeing. So as bullish as things seem to be, this is not the time to be freaking bullish, okay? VIX review, guys. Basically, VIX, as shown on this chart right here, VIX is creating a nice, solid little uptrend over the course of the last 48 hours. You want to stay with this uptrend. Basically, VIX is pointing, the 3-day divergence we're observing in VIX is saying that the market will move lower, not higher overall over the course of the next few days. Now, don't expect this move to be huge. Friday, we've shown you this chart was basically a pattern that is known as a reverse head and shoulder, which is highly bullish for the VIX. So VIX goes higher, market clearly drops. The key takeaways from this video, guys, is short any intraday bounce. If we get to a level of 3,008, 3,015, there's too many things that could take this market down, and we don't want to miss it because the cost of put options is minimized, which actually creates some of the greatest trading opportunities. So do not trade big when it comes to directional position and indexes until VIX hits 14.815 or oil breaks below 52. Now focus on trading earnings. We will break down really good trades over the course of the next 72 hours as some of these really great companies that typically move a lot after they announce earnings will be announcing earnings in the next few days. With that, trade lightly today or take a day off. Focus on trading earnings over the next few days. Let's rock. Make it your best week. I'll catch you guys on the next trade soon.
Can't you see that I am not afraid?